Hey everybody, my name is Devil Mode. With all the hubbub going around with GameStop and the stock market overall, it's been really hard to focus on other things. But one of those things is Tesla's Q4 earnings report of the year 2020. And that's something I want to talk to you about in this video. A lot of the reporting on Tesla's earnings report is kind of negative, with people saying that they missed their expected earnings per share by 20%, and other articles saying that a lot of their revenue growth is actually due to CO2 regulatory credit sales. Along with these negative articles, Tesla's share price has been dropping steadily over the past couple days, although it is hard to determine whether that's due to GameStop or Tesla's earnings report. But when I go through and read Tesla's earnings report, I'm not as discouraged as I would be reading those articles. So before we go into Tesla's earnings report, I want to state a couple of key factors that I think are important to look at. So the first thing you want to look at is vehicle margin, is how much money Tesla is making per vehicle. It's very important. The second thing you want to look at is energy storage deployed. This is a very big market, especially with renewable energies, and it's something that Tesla can dominate. And the last thing I want to look at is significant updates with their full self-drive, their manufacturing facilities, and any other vehicle design updates. So let's start off with vehicle margin. So the way I find Tesla's vehicle margin is by taking their automotive gross profit and dividing it by their automotive revenue. Now, something else to consider is that some of this profit and revenue comes from selling regulatory credits. So we need to subtract that out of the equation. So to truly find the vehicle margin, you need to take automotive gross profit minus the regulatory credits, and then divide all of that by their automotive revenue minus their regulatory credits. So then what you'll find in Q4 of 2020 is that their margin is about 20%. So when you look at previous quarters, Tesla's vehicle margin hovers at around 20%, although in Q3 of 2020, it jumped up to about 23.5%, which is really good news. But it's kind of discouraging to see that the margin actually dropped back down to 20%. Now, Tesla does touch on this point in their earnings report, stating a couple of factors that impacted their profit. So when you go to page 6 of Tesla's earnings report under profitability, we see that some of the major impacts were due to the price cuts on the Model S and X and Model 3, as well as other impacts such as Q4 SBC charges, vehicle warranty accruals, additional supply chain costs, and the Model S and X changeover costs. Now, it's no surprise that when you do price cuts on your main selling vehicles, you will see a reduction in profit. So around May of last year, the Model S, 3, and X had price cuts up to $5,000, as well as later in October, the Model S saw additional price cuts down to $69,420. Additionally, when you consider that COVID-19 is still a thing, supply chain costs are probably going up due to issues with gathering materials, getting your manufacturers to deliver on time, things of that nature. Ideally, we would have liked to see vehicle margin go up, but it can be understandable that it might have gone down in Q4. Now, I don't think it's catastrophic seeing this vehicle margin dip, but it is a little discouraging. I do not see this as being a long-term impact, though. Now, moving on to energy storage deployed, this is where Tesla saw a significant increase in energy storage deployed. It is actually crazy. So something interesting to note is that Tesla mentions their Megapack sales are one of the larger contributors to their growth in the energy storage deployed, which is very encouraging considering renewables are getting a lot of attention right now, especially from the presidency. And I would expect renewables to be growing very rapidly over the next 10 years. Energy storage also goes hand in hand with residential solar, and as Tesla increases their sales on residential solar, they'll most likely increase their Powerwall sales. Something else that's touched upon in the earnings report is actually vehicle design updates, specifically on the Model S and X interior. Now, they show some nice pretty pictures in the earnings report of what that new interior looks like, and it looks pretty nice. But something that you might note when going to the website for Tesla, when you look at Model S and X, is that they're the same. They're practically the same. Now, I think this move is very smart because it reduces a lot of costs associated with running multiple different parts on different fabrication lines. Now, something in the manufacturing and engineering business is called NRE, or non-refundable engineering. And these are costs associated with setting up new product manufacturing lines. Some of these costs would include design of tooling and machinery used to manufacture the product, as well as the building layout and product line layout. And something else to note is that larger quantity orders have lower per unit costs, which help Tesla meet better vehicle margins. So I want to help you understand how big of an impact non-refundable engineering costs can be. And so I want to give a quick example, which is maybe just manufacturing a simple coiled spring, a compression spring. Now, the costs of setting up that machinery could range anywhere from, I don't know, $50,000 to $100,000. And if you only build 10 springs, the costs of each spring will be massive. And the reason why it's massive is because the manufacturer is trying to make up their costs in NRE as well as material costs for actually making the compression spring. But as soon as you start building much higher quantities, they can split that non-refundable engineering cost across multiple quantities or larger orders. And so the actual per unit costs goes significantly down. Now, as a side note, this example assumes that the spring we're manufacturing is not a commercial off-the-shelf part, meaning that it's not something regularly manufactured and would therefore have a cost associated with setting up the manufacturing process. Now, there are a couple of other smaller points that I wanted to look at in Tesla's earnings report, and specifically that is R&D costs. Now, when we look at Tesla's earnings report, we see that for the past couple of quarters, from quarter 4 of 2019 to quarter 3 of 2020, the average R&D expense is about $330 million. But when you look at quarter 4 of 2020, the R&D is $522 million. Now, I'm not sure what this money's for, but this is kind of encouraging to see that maybe they're coming up with something new, some new design, some improvement. I don't know. Now, the last thing I wanted to point out is the performance increases that Tesla mentions in their earnings report. And it's just a minor thing, but it's kind of cool. Now, when we look at page 9 of Tesla's earnings report, we see Tesla Model S Plaid has a 0 to 60 of less than 2 seconds and a quarter mile of less than 9.3 seconds. That is incredibly fast. And when you look at some of these other cars that they're comparing to, these are not cheap cars. I think this chart helps validate the performance that a electric vehicle can give you. I can't even imagine what a 2-second 0 to 60 is like, especially when my 2013 Elantra does 0 to 60 in 10 seconds. Every time I put pedal to the metal, it feels like my car is about to explode. All right, so even though Tesla missed their expected earnings per share for quarter 4 of 2020, I think Tesla's future is still very bullish. They have a lot of potential to grow, especially in the renewable energies market. And I think Tesla is making very smart decisions with their manufacturing by making the interiors of the Model S and X identical. And this should help improve vehicle margin. And hopefully in the future, we'll see maybe in the next year or two, full self-driving. It'd be kind of nice. The electric vehicle market and renewable energies market is here to stay, and Tesla is probably the biggest player in it. And I think they have a lot of room to grow and their future is very bullish. So if you liked the video, like, comment, and subscribe, and I hope to see you soon. Take care.